Let's bring you the very latest in the world of business. South Africa's rand gained for a third session in a row yesterday, powering to a new one-week best as weaker than expected U.S. inflation data halted in advance. Now, Treasury yield and fueled appetite for risked assets in the equities market. Stocks rose, led by mobile operator MTN Group and investment firm Brait. For an update on the latest market and currency moves in early trade, we're now joined by Bianca Botes, Executive Director at Citadel Global. Bianca, a very good morning to you. Thanks for joining us on the AM edition. The rand has had a mixed performance this week, but it looks to be ending the week on rather a high note. Let's go through some of the factors driving the local currency moves.
Good morning, Paul. Yes, we've actually seen the rand claw back significant ground. We started the week off close to the 1550 range, and we are trading down to 1497 at the moment after reaching a high of 1480 during trade yesterday. This is mostly attributed to the upbeat sentiment in the market following the inflation numbers from the US. So we have seen quite a few jitters in the market relating to the inflation in the US, and that really put those fears to bed for the time being. We've also seen US Treasury bond yields pull back after they shot up over the past couple of weeks, and that is really attributed to the rand gaining some momentum.
Will the rand reflect the domestic woes taking place? I mean, the student strikes, the load shedding, among other factors there.
Currently, it's really a risk-on environment, so we are seeing a lot of inflows into risk assets. The market is very upbeat about the growth prospects for the global economy, especially after Joe Biden's economic stimulus package. So currently, we're not really seeing global factors filter into the rand, and it's really mostly focused on this risk sentiment that is currently driving the market.
Brent crude oil, on the other hand, holds at near the $70 a barrel mark as hopes rise on demand recovery, while gold looks on track for the best week. Take us through some of those developments.
Gold is indeed on track for the best week in 7 weeks. We've actually seen an uptick in gold prices on the back of those US Treasury yields pulling back, and then the upbeat sentiment we are seeing in the market. When we start taking a look at oil prices, we have seen significant supply cuts coming through. We've seen OPEC restricting those supply, and basically the market coming back to life. So economies coming back into full function, travel starting to resume to some level. With the vaccinations being rolled out, it's expected that most economies will actually start opening up their borders and allow less restrictive measures when traveling, and that is all assisted in boosting the oil price.
And the signing of a huge U.S. stimulus bill has boosted markets, further benefiting from the central bank messages on rising bond yields. How do riskier markets like South Africa stand to benefit from this, if at all?
The increase in risk sentiment in the market, as well as an increase in liquidity, normally sees an inflow into risk assets. South Africa, as an emerging market, is aligned with those risk asset baskets. So we actually see quite a bit of money coming into South Africa, especially due to the fact that South Africa offers higher interest rates. So we see quite a bit of portfolio inflows coming in for that carry trade. Basically, investors are lending at low rates, bringing the money into South Africa and picking up on that additional interest rate.
Thank you so much for your time and that very thorough analysis. Let's leave it there for now. Bianca Botes giving us a sense of how the markets are faring, as well as the very latest in the world of